the feds have unveiled their latest blueprint for the Canadian economy. Finance Minister Chrystia Freeland delivered the fall economic statement in the House of Commons today. The government is attempting quite the fiscal juggling act, trying to balance programs to build more homes, make life more affordable, and bring down inflation. The CBC's Rafi Boudjikanian begins our coverage from Ottawa.
Chrystia Freeland is trying to tackle affordability issues while keeping an eye on the bottom line. Beneath that tightrope, a worsening economy ahead.
Our economic plan is focused on building an economy that works for everyone, with good jobs that people can count on.
The new spending outlined today is modest, $21 billion over 6 years, most of it aimed at housing and previously announced programs such as heat pumps and the removal of the GST for rental construction units. It is a sign the government doesn't want to add to the inflationary fire.
I am today announcing new measures through our economic plan to build thousands upon thousands upon thousands of new homes across the country.
There is a $15 billion loan program starting in 2025 to kickstart construction of new rental housing units. And the government also intends to cut down on red tape, allowing construction workers to move across the country more easily to build these new homes.
They recognize the scale of this problem is enormous, it's historic.
But for this observer of the economy, these are measures that will barely start addressing the housing shortage in the country.
This is not something that's going to get solved in this fiscal update or even in the next budget. We'll be talking about this in the next election and probably the next election after that.
An issue for the official opposition for months, engaging again today as the ink was still drying on the economic statement.
It now takes 25 years to save up for a down payment in Toronto. You used to pay off a mortgage in that time. Since this Prime Minister has taken office, families have stretched out the terms of their mortgages to 90 years.
Affordability is likely to be on Canadians' minds next time they're at the ballot box as they weigh how well the government has balanced spending with restraint in the middle of global uncertainty. Rafi Boudjikanian, CBC News, Ottawa.
Early in the day, organizers at this Vancouver conference for nonprofit housing were optimistic about what the government would announce.
It's very, very welcome news. It's something we've been advocating for. We've got hundreds of shovel-ready projects where the zoning is in place, permitting is in place. What they're lacking is the finance.
But then came the details, specifically that $15 billion in loan funding for rental housing would not be available until 2025-2026. Same timeline for the $1 billion for purpose-built community housing. The CEO of the BC Nonprofit Housing Association called me back to make sure I knew how disappointed she was. A sentiment echoed by the provincial housing minister.
I'm a little concerned that the money is out to 2025 and 2026. People are struggling for housing right now, and we need those dollars right now.
The problem is when interest rates went up, some rental housing projects were stalled or shelved. The cash promised today likely won't mean move-in ready homes until at least 2030, says the BC Nonprofit Housing Association. And there's no guarantee builders will take the government up on its offer.
So you can provide low-cost loans, but if the private sector looks at market conditions or is looking at the economics of their projects and it still doesn't work, even with low-cost loans, they're not going to build.
This researcher is glad to hear the government talk about housing, but
we don't think that the gravity of the housing crisis is reflected in the announcements that were made today.
And the thing about waiting so long for cash to start flowing is a lot can change in a couple of years, including governments. Long-term promises may not survive an election. Lindsay Duncombe, CBC News, Vancouver.
Bikramdeep Singh knows there's some tough times ahead.
Probably have to cut down on going out for dinners or taking out every now and then with family.
He bought his new Westminster townhome in 2019 when interest rates were lower, but he's up for mortgage renewal next year and facing a much higher rate.
So that's going to be bringing my payments 30 to 40% up. So that's going to be a significant chunk of money that I'll be spending every month. So that is gonna affect like definitely my lifestyle. So I'm gonna have to like make some adjustments.
I think part of me is just wanting to not really have to think about it until crunch time, only because it's rather daunting.
Perhaps an even bigger struggle for Kevin Larkin. His mortgage for his Surrey condo is up for renewal come January.
You know, I've just been running the numbers, and I don't see how I'm going to be able to renew and afford this. And it's unfortunate because you know, I'm a professional. I work. I'm trying to support a family.
Some brokers say it's likely to be a tough year ahead, with interest rates expected to hold firm for at least the first half of the year.
There's going to be a lot of individuals who will feel this pain. Unfortunately, you know, foreclosures are something that we don't like to talk about. You know, we don't want to see, but a lot of people are struggling.
But there is some relief for Canadians. Ottawa announced the removal of the 2% mortgage stress test for renewals.
They're almost going to qualify at close to a similar rate that they may have already qualified in the past, because that stress test, that 2% is not there. So that's going to save a lot of people.
Other supports include extended amortization periods and waived fees for delayed payments.
Is it going to have an effect for my particular situation? I don't know. But again, any kind of sign is a good sign.
I would hope that it will be accompanied by cut in rate of interest, like sooner rather than later. Yeah.
Cautious optimism during a time of growing financial uncertainty. John Hernandez, CBC News, New Westminster.
Well, last month, the BC government announced new regulations to crack down on short-term rentals like Airbnbs, including higher fines for hosts who break bylaws and a ban on short-term rentals that are not part of the owner's principal residence. Well, Victoria real estate broker Dustin Miller says the stricter rules have forced dozens of Airbnbs to go up for sale, but few of them have actually sold. So he joins us now to talk more about this. Thank you, and we'll get right to it. So walk us through what you see as the direct cause and effect here.
Well, it's directly linked to Bill 35, the Short-Term Accommodation Act, which was announced October 16th and has since been formalized, obtained royal assent. I haven't been seeing these units selling. And why aren't they selling? Well, because they're priced at quite a bit of a premium. And buyers today are having a hard time justifying that premium now that that Airbnb revenue stream is gone.
Let's talk about how you came to this conclusion. I understand you keep a list of buildings holding legal non-conforming status, those that were grandfathered in before 2018 when Victoria banned people from renting their secondary units on Airbnb. So how many units with this status have been listed in the weeks since those stricter rules were just announced?
So since the October 16th announcement, there's been 55 units that have been listed for sale in downtown Victoria. Only 2 of them have sold. And both of those units were about 360 square feet, small studio units, and they sold for about $350,000.
So that number of units going up for sale, I mean, how much of an increase is that compared to previous years? And what does that say about the housing market for sellers in general?
Well, I did see a sharp increase in listings even prior to this October 16th announcement. I guess some owners were anticipating big changes. I personally saw this come out first with the Homes for People plan that was announced back in April of this year. As of today, there's 76 active listings for legal non-conforming buildings in downtown Victoria. The past 3 to 4 years, I'd say we'd only typically see around 5 or less of these listings at any given time.
So, I mean, broadly speaking, the province's goal with this, they say, was to put more affordable homes on the market for people who live here, essentially. So they hoped they would have a desired effect. Were you surprised to see that many listings, Airbnb listings, go up for sale, I guess, this quickly after that announcement, given it won't be enforced essentially until the spring?
Yes, I agree with the spirit and the intent of the legislation, which is has a goal of making homes available either to rent or to purchase. But at the same time, I'm also have a bit of a concern about the overnight loss of property rights and the change to the legal long-standing legal application of grandfathering in this province, which is concerning. But so far, I haven't seen this benefit any first-time home buyers or young professionals looking to get onto the property ladder. The units are simply priced way too high, whether it's for sale or for rent, and many of them are just undesirable as long-term rentals. A 400 square foot micro unit isn't super appealing to most people.
And I just want to touch on briefly as well as we end here, we should mention that today, as we heard off the top of the show, the federal government also announced plans to tighten up tax rules for short-term rentals. Do you think that will further impact Airbnb sales, or I guess lack of sales?
Yeah, this new CRA federal government announcement is targeting units that are prohibited by legislation. All these downtown Victoria condo units are currently legal, and they will be until May 1st of next year. I do think this will have an impact more immediately on, say, municipalities like Esquimalt, Saanich, North Saanich that don't have a licensing system and don't have clear rules surrounding Airbnb use. So I think we could see an increase in listings in the surrounding municipalities that don't have the legal structure that City of Victoria does.
Thank you for your insights on this, Dustin.
Yeah, you're welcome, Tanya.
That's real estate broker Dustin Miller joining us tonight.